What if I told you that just $100 could completely change your financial future? Most people believe investing only works if you already have thousands of dollars. Because of that belief, they delay starting for years, waiting for the perfect moment. But here's the surprising truth. Many successful investors didn't start with huge amounts of money. They started small. In fact, the most important factor in building wealth isn't how much you start with, it's time and consistency. A single $100 investment might not seem like much today, but when combined with the power of compound growth, it can become the first step toward real financial freedom. So, in this video, we'll explore how a simple $100 investment could shape your future. One of the biggest myths about investing is the belief that you need a large amount of money to begin. Many people assume that investing only makes sense if you already have thousands of dollars saved. Because of that belief, they delay getting started and spend years waiting until they earn more money or feel more financially secure. Unfortunately, this waiting often becomes one of the biggest financial mistakes people make. The truth is that investing is less about how much money you start with and more about how early you begin. Time is one of the most powerful tools in investing because it allows your money to grow through compound returns. This means your investment earns returns, and those returns begin generating their own returns over time. Even small investments can grow significantly when they are given enough time to compound. Someone who begins investing small amounts early in life often ends up with more wealth than someone who starts much later with larger investments. The difference comes from years of growth that cannot be replaced once they are lost. This is why the most important step in investing isn't having a lot of money, it's simply making the decision to start and allowing time to work in your favor. The real engine behind long-term wealth is something called compound growth. Compound growth happens when the returns on your investments begin generating their own returns. In simple terms, your money starts working for you, and then the profits your money earns also begin working to produce even more profit. Imagine investing $100 and earning an average return each year. After the first year, your investment might grow slightly. In the following year, you are no longer earning returns only on the $100. You are earning returns on the $100 plus the growth from the previous year. This process continues year after year, and over time, it creates a powerful cycle of growth. A helpful way to think about compound growth is like a snowball rolling down a hill. At the beginning, the snowball is small and moves slowly, but as it rolls, it gathers more snow and grows larger, causing it to gain momentum and grow even faster. In investing, the same principle applies. At first, the progress may seem slow, which is why many people underestimate its power. However, with enough time and consistency, compound growth can transform even small investments into surprisingly large amounts of wealth. Despite the benefits of investing, many people never take the first step. One major reason is fear. The stock market can seem complicated, and beginners worry about making mistakes or losing money. Another reason is the belief that small investments are meaningless. People often think that $100 is too little to matter, so they postpone investing until they have more savings. Unfortunately, this mindset prevents them from gaining valuable time in the market. Successful investors understand that investing is not about being perfect, it's about being consistent. Everyone starts as a beginner, and learning happens gradually along the way. The earlier someone begins investing, the more experience and confidence they build. Instead of waiting for the perfect moment, the smarter approach is to start small and improve over time. A single $100 investment can be powerful, but its real strength appears when it becomes a habit. Many successful investors follow a simple strategy: invest regularly and consistently. Instead of investing once, they contribute money every month or every paycheck. For example, imagine investing $100 every month for many years. At first, the growth may look small, but over time, those contributions begin to build momentum. As the investments grow and compound returns accumulate, the results become much more impressive. Consistency also removes the pressure of trying to predict the perfect time to invest. Rather than worrying about market ups and downs, you simply continue adding to your investments over time. This disciplined approach helps build wealth gradually while reducing emotional decision-making. For beginners, the best approach to investing is often to keep things simple. Many experienced investors recommend starting with index funds or exchange-traded funds, commonly known as ETFs. These funds allow you to invest in hundreds of companies at once, instead of trying to pick individual stocks. By spreading your investment across many companies, you reduce risk and gain exposure to the overall growth of the market. Historically, broad market indexes have performed well over long periods, despite short-term fluctuations. Another beginner-friendly strategy is dollar-cost averaging, which means investing a fixed amount regularly regardless of market conditions. This approach helps reduce the impact of market volatility while encouraging consistent investing. For many people, these simple strategies are effective ways to start building long-term wealth. While investing is often associated with making money, the deeper goal is financial freedom. Financial freedom means having enough savings and investments so that money no longer controls every decision in your life. Instead of relying only on a paycheck from your job, your investments begin generating returns that can support part of your lifestyle. This creates greater flexibility and peace of mind. When your money is working for you, you gain more control over how you spend your time and energy. It allows you to make choices based on what truly matters, whether that means pursuing a passion, spending more time with family, or reducing financial stress. The journey toward financial freedom usually does not begin with large investments or sudden success. In reality, it often starts with small but consistent actions repeated over many years. Building wealth is a long-term process that rewards patience and discipline. A single $100 investment may seem small today, but it represents something much more powerful. It shows that you are thinking about the future and taking the first step toward long-term financial growth. Over time, those small decisions can grow into meaningful financial security. If you enjoyed this video and want to learn more about building wealth with simple investing strategies, make sure to subscribe to the channel. Also, check out the next video on your screen, where we explain how investing just $10 a day can grow into serious money over time. Thanks for watching, and I'll see you in the next video.